Hello, everyone, and welcome to the newsletter for November 15th. Today, we're going to go through purely on-chain and run through a lot of my charts and just kind of get a bit of a feel for where we are. Because, if you look at the Bitcoin chart, we've clearly had this fairly tremendous rally, which I'm sure some of us are having flashbacks to our runaway train back in 2019 when everyone was saying, gee, I didn't fill my bags enough. And we got a second bite of the cherries. We got 2019 really sold off. We got a nice capitulation. It's kind of been a bit of a slow grind upwards. And, we discussed a few newsletters back, the supply dynamics, where we've really got almost the fewest coins that have ever been on the market, 6.5 million or 6.6 million. And at the same time, we've now got institutions stepping in to start buying BTC. So, I think ultimately the level of support that is going to be in the market right now is very strong. What I want to go through today is where, if we look at our historical fractals and our various other on-chain metrics and, fair price models and the like, how do the patterns line up? What does it look like compared to previous bull cycles? And really, what I want these tools to be is a bit of a how you keep your cool, right? When things are going to be moving at a pretty intense pace sometimes. We're going to get these runaway candles, and we're going to get these fairly strong moves to the upside. We know that Bitcoin likes to do its 30%, 40% pullbacks and shake everybody out. So, there's a buy the dip layer to this. There's a, not chasing after things, but also being aware that what stage of the bull market we're in, because, we've spoken a number of times before, but we'll look at it again in more detail here. There's kind of two phases of a bull market. There's the early crawling phase where it's just starting to get a bit of momentum and, call it the disbelief phase where we start crawling up the wall of worry. And then there's a transition point when we start to see things like the realized price and the Maya multiple and things start to really accelerate and we get steeper gradients. So that's what we're looking for, is we're looking for this steepening of a gradient. And there's a few things here. I mean, even if we look at our magic lines chart, you can see that the realized price is starting to curl up at a greater rate. So we've had this slow increase through 2019 and 2020, and we're really starting to see this move upwards. Now, this is a combination of obviously higher prices, but also coins moving on chain. So you actually need coins moving in order to engage the realized price and start creating, that on-chain movement as well. And it's got to be in size in order to actually move the realized price. So, this is a positive thing in my mind. It's heading in the right direction. Another one that's certainly worth pointing up is the 200-day. So let's turn off all of our other moving averages. Our 200-day moving average, you can see our previous all-time high was at 10,300. And you can see that we're currently at 10,700. So the 200-day moving average has now moved into a well and truly uptrend. It is, it's essentially broken its previous all-time high. And in almost every instance where we've seen that in the past, we'll look at it in an upcoming chart. That's generally the signal of the market's really starting to transition. We're starting to get some upwards momentum. We're getting into maybe maybe even halfway. Some of the charts we can look at the moment tell me we're somewhere around maybe halfway through this bull market, if you can believe it. So, let's start looking at it. I actually include a reasonable portion of this rally up here as part of the bull market. It was that early reaccumulation phase. So, some of you who will be doing the on-chain modules at the moment, we've got some of the classes on Maya multiple, and it will look at this. It will look at this kind of early phase bull market and how we get that transition over time. You get an reaccumulation phase after the capitulation, and then we start to really accelerate. So let's start looking through it. But some key takeaways from the magic lines. We have a 200-day moving average all-time high. That is generally the start of the next phase of a bull. So, we're well and truly in it. Now it's about the acceleration that we're looking for, and we're starting to get a movement in the realized price. So these are all good things. This is saying that coins are moving on chain. Price is clearly leading in there. And I mean, even if we turn back on our magic lines, I mean, there's just no support anywhere to be seen. And a lot of these moving averages are very slow. We're talking about 200, 128 weeks. The fastest is the 128-day. Now, if we do get a sharp pullback, the 128-day, if we're moving into the later stage bull, 128-day is a great place to be looking for that dip, and a stronger support below that will obviously be the 200. So, we may or may not get a retest of these. Usually the 128-day takes over in the late stage, because as you can imagine, more buy support steps in. It never is allowed to get down to the 200. So later in the bull market, the 128 day is going to really step in and be the primary large scale buy the dip indicator. And you can actually see back here in the purple, we had towards this late stage bull market where things are really accelerating. We got these touches of the 128 as support. And then when it actually deviates from the 128 and we don't even get a touch there, that's when we start moving parabolic, despite the fact that this looks a little bit like this. So I would not be surprised if we get a pullback, but that's kind of where we are in terms of our magic lines. And I mean, I still find this chart just fascinating. This is looking at the previous epochs or cycles when we compare them to just basically previous growth multiples. The thing is just tracking previous history. I mean, this is telling us we could get some pullbacks. It's saying we're starting to get into the territory where we've had this nice little extension. I think even from a technical analysis, I'm sure everyone's looking at this thing thinking, gee, it's probably time for a pullback. But you can see we're pretty much tracing the previous bull, which, call it human psychology or call it voodoo magic, whatever you want to say. It's a pretty interesting metric to be following this. So we'll keep revisiting this chart because it's going to be very interesting to see whether we can manage to actually follow in terms of growth as well. Because we've spoken before about, each cycle we're going to get less gains. Well, what if that, whole assumption breaks and, we really start to get some very strong. I mean, this was 100x. So this is a good chart to just keep an eye on where we are, and it's a little bit bizarre how well it's actually kept up with this. And I've spoken before that in the 2015 bear, we had this kind of long, slow base pattern. If we didn't have that short squeeze back in 2019, there's every probability that was just going to follow this same trend. So this was kind of a breakout. Call it a large scale false breakout, because then we had basically a year-long bear that followed it, more than a year. So, it's very much following the previous trend, which is pretty interesting. Let's go to our stock to flow model. So obviously this will, this is setting your moon math numbers that you'd hope that it gets up to. You can see that we're pretty much starting this curl up, as you would expect. It's starting to follow, the scarcity. If the old sage plan B is right and has anything to do with it, they'll apply whatever smooth moving average just to make it look absolutely perfect. So it's it always lines up. But you can see that if we use the stock to flow model and we just use it as one of our many fair value metrics. Previously, when we get our halvings, we get these enormous dips down where it just goes into the undervalued zone, because technically the stock to flow is now, doubled essentially. And you can see that we haven't actually managed to get out of that zone. So it's starting to tell us that, if we believe that there's some momentum to this thing, this is almost like your spring. It's managed to remain post-halving in a fairly undervalued state relative to the scarcity metric. And it spent some time down here. So it's very possible that we're going to start getting this acceleration. Back here it was pretty quick. Here it took a little bit longer. Considering we're following the previous cycle, it could very well be that we just start trending upwards in this case. So it's a bit of a wound up spring, and you can see that we can start moving up towards these higher peaks. So there's two different stock to flow models on this chart. The blue ones are Plan B's, purple ones are mine. My model is essentially using all the data every day and rerunning the regression. So where Plan B will select, whatever data points he needs to get 99.99% accuracy, I'll just run this thing because I think it's, I believe there's some validity to, using stock to flow, and, you get a 90% correlation. So it's that's still pretty good. In fact, very few things get that kind of accuracy. Well, accuracy, but all models are wrong, some are useful. I like to use stock to flow purely as just another estimate of where price could be, right? It's just a psychological level. You can compare it to any other thing. It gives people a guide, and who knows, maybe it's a self-fulfilling prophecy that more people look at stock to flow, and therefore they just believe the thing happens. And you guys will be looking at the network psychology module, which is first up in the master chain class. And, you get pretty much that idea that it's people believe it's going to happen. People believe it's going to bounce off the 200-day, and lo and behold, it manages to do just that. So in terms of some price levels that this thing is at least estimating for the, and you can see that previously we get our rally, it breaks well and truly above our stock to flow model, and then basically comes and rests in between those. So interestingly, mine and Plan B's bound it. Totally by design, but you can see here that it's, it's capturing the bulk of the bear market between these two models, which is, it's kind of cool. And what this is telling us is that somewhere between 77, which could be somewhere near the floor of the bear, I think the analysis I ran some time back showed that the stock to flow model actually approximated where the realized price ended up. So, it kind of makes sense that we're getting this psychological level here. So somewhere between 75,000 could be the floor of the next bear, 120,000 being kind of the median target. You can see we're kind of at the top level of this bear. We've got the bottom level down here. So, we could be ranging somewhere between 120 and 75. And look, I know that we're kind of assuming that Bitcoin's going to go up, but I think we're all here because we believe that Bitcoin's going to go up. So let's entertain ourselves and enjoy some moon math. Now, you can see that some of the spikes on the previous stock to flow model, we're getting us 19,000, 17,000, 14,000. Now, these spikes come from nothing other than randomization. Some guy turned on 50,000 ASIC rigs. It's all about the mining difficulty, how fast blocks came in on that particular day. And, clearly that's a very, very variable metric. But, it gives a reasonable range. So, we can kind of use this as a guide, right? A finger in the air, just get a feel for where things might go. And, some of these spikes are telling us 250, 260. So in terms of, let's just be sensible in terms of our moon math, there's every probability that this thing is going to rise up, hit somewhere around the 200 and somethings, mid to 250,000s, and then crash back down and sit somewhere between this stock to flow model. So, considering none of us can predict the future, it's kind of interesting that there'll be a lot of people looking at this type of model, particularly Plan B's model. There'll be some kind of self-fulfilling prophecy that comes into this. So it might be levels just to keep your mind aware of. And, again, as more data comes in, we'll get more of a feel of where we're at. Unrealized profit and loss. So this is more or less picking up the difference between market price and the realized price. So if we assume that the realized price is everybody's cost basis and the market price is where it currently is, you can basically calculate your profit and loss. And obviously 0 means you're below 0, you're at loss, and above, means that you're in the green. I think that pretty much, if we're looking at the all-time high, 16,000, you had all of 12 days where you could have really bungled it up, which I'm sure some of us in the audience, myself included, certainly bought somewhere up here. So at least one of my UTXOs is underwater. But as for the rest of it, what we've basically seen, so let's go back to our previous cycles. We obviously see the capitulation phase. We get the rally up where we start to get a little bit of momentum. This is that reaccumulation phase. We get a spike up into the belief, starting to get a little bit of momentum. Then we get our first major pullback. Then we manage to break up and maintain a little bit of this belief denial phase. We maintain that. And then you can actually see there's almost two levels of this belief denial. There's this level here. And then you can see that the resistance of this point here becomes the support level for this next phase. It kind of elevates up, and we'll actually see that pattern show up in a couple of charts upcoming until our final blow off top euphoric point in time. So you can see here that we've essentially broken up. We've had this first purple retest where we've got that belief stage. You almost combine this and this as being that same thing where you just tap into that level of belief, and then we fall back down. This is basically saying 50% profit or 55% profit. We got to 60% and we got to 50%. So, if you take an average, we're sitting in there. So this leads me to believe, based on some of the metrics we've looked at, but this one as well, this is the zone where I feel like we are. And you can see that's pretty much capitulation, first half of bear, acceleration of realized cap, jump up into the belief denial, a bit of another round of reaccumulation, some pullbacks. I can see us now entering this phase here. We're getting this start of the realized price moving up. So I would expect some volatility sideways and maybe like a grinding higher on the macro scale, on the weekly scale. I can see this kind of reaccumulation period. So my gut feeling, if we look at a lot of these fractals and we believe that they exist, I think that we're halfway through this bull, and I think we're going to go through a bit of volatility until we go into the full acceleration phase. That's kind of where I'm at. If we get another major leg higher, I think the chance of a strong pullback into that kind of environment is strong and good. Or we could just basically go into a bit of a grinding phase from here. So I think we might be halfway, which is, it gets obviously more exciting as we go from here. But this fractal is telling me that we're somewhere in this reaccumulation phase. We're getting to the point where we're allowed to now enter and remain within the belief phase. So we've had that initial profit taking in here and then again in here. And now we're getting to the point where people are quite happy to hold their coins through this particular zone. And obviously there's withdrawals going on that's causing this this increase, as well as probably some old coins moving. And old coins will continue to move over time. And particularly as we go into the euphoria phase, that's where it gets really, the old sellers really start liquidating. Now, similar to this, so this is the golden ratio. So, to be honest, this is a bunch of moving averages with Fibonacci levels and stuff applied to them. The thing that I want to show you here, again, how much these levels actually have significance, or it's just magic that they happen to line up, is a different question. What I want to show you is, see through this bull market, we had this first half where it was all below the golden ratio. So I forget what actual moving average this is, so forgive me for that. But you can see that through the early bull, we trade between purple and blue, and then we manage to jump up, and then it starts to find support and actually remains continuously above that blue golden ratio until blow off top. We get a fairly similar phase. We've got this zone where we're underneath. We manage to get up on top, and then it basically uses that as support all the way up. And you can see here that we've done our channel, right? We've progressed through the channel. We've actually broken out. So let me jump now to this guy here, which is zoomed in. You can see we've broken out and we've actually found a little bit of support and held it. So, this is promising. This feels like, to me, if we manage to get up here and hold it, it's another indicator saying potentially 50% point. So we're now lining up 200-day moving average all-time high, 50% point. Mapping it to the previous cycle, kind of looks like 50%. Unrealized profit and loss, 50%. Golden ratio, 50%. Mayer multiple. So this is I would give this a little bit more weight than our golden ratio, because this is based off our 200-day moving average. And then down here, we've got our Mayer multiple, which gives us our probability. So on the right-hand side here, this is basically saying that there's a 15% chance of that value occurring, 0.6, 30% of it, 0.8, 20%, 1.6, so on and so forth. So what this is telling us, you can see the same thing. So in between the 200-day moving average, which during the early bull market is our support level, once we move into, and it's bounded by the caution level, which is essentially there's only a 20% chance that it gets up to that point. So you can see here that we're actually maintaining that ceiling through the early bull. We're in this channel. Then we get the break above at the halfway point. And then it basically finds support on the caution level, starts to hit into the sell level, and then finally we get the strong sell level at the very top. So I guess where I'm looking at the moment is, are we here where we're just retesting? So you can see that we're coming up and testing the caution line. Are we testing then one of these big pullbacks that we're going to get, or are we actually going to get above and hold that line? That's what I'm looking for at the moment. I want to see what the volatility looks like moving on from here, because if we manage to get above and hold it, again, that's another signal that we're probably moving into the second half of this bull, or we could be maybe in the last, the last innings of this reaccumulation / early bull market phase. And you can see that here's the all-time high, right, at 1,120. And we break above that for the first time here. So more or less, we break all-time high, and then we go into the second phase. So potentially, we do actually have to go a little bit of sideways action from here, a little bit of volatility until we finally break all-time high, because that would obviously be the next leg, is getting above all-time high. That's when things get pretty exciting. So in terms of an actual price level, if you believe that there's only a 20% chance that we're going to actually tag this level and hold it. Now, forgive me, no, that's right. 20% caution. So this is a sell level. 10% is really getting overheated. You can see we hit this sell level here, which was our peak back in what was that, May or June or July. You can see we're coming up to the caution level. So there's only a 20% chance that price will keep going based on historical fractals. So that's a pretty good probability that we're going to get some kind of pullback, at least in the near term. So that level will be 17,200. So that gives you a bit of an idea if you're mapping out particular levels where it could be a bit of a blow off top. Maybe we spike up through it, but that feels like a resistance level. Particularly at this mid-cycle and particularly on this type of extension. Very, very similar metric, MVRV ratio. So instead of the 200-day moving average, we're using the realized price. This is measuring how far away from the realized price we are. Exactly the same probability framework. So we're talking about, these are actually here. So these are 80%. That's the other way around. This is saying that 80% of history is less than that level rather than 20%. So just do 100 minus these for percentage. So MVRV ratio, you can see a fairly similar thing. We came up and retested this first sell level. So we've got our early bull, and then we finally break up above that first sell level and hold it. That's our late stage bull. You can see we're essentially reapproaching that particular level, that kind of first selling point. That's 18,000. So, we've got 17,200, 18,000, both being, strong sell levels. Both of them actually picked up this top here. So I would expect some kind of pullback just to cool off the market a little bit and shake some people out. Between 17.2 and 18,000. It's kind of that range. If we get above those levels and it just keeps going, and then we get to all-time high, that to me is telling me we're moving into acceleration phase, and it's probably getting into the the second half of this bull. So, if you want to start calibrating whereabouts in the market cycle you are, these are the type of kind of levels and trends and things that I'd be just keeping an eye on. Because we're seeing this fractal play out bizarrely similar to what we had in the previous bull, so that's exciting. And block subsidy level, so pretty much the exact same story as what we had for Mayer multiple and MVRV. What I'm really excited about is that these are showing us a bit of confluence, which is good, right? We're starting to get some high conviction levels that are all starting to line up and tell us a similar thing. So the block subsidy models is basically taking the thermo cap. So this is the proof of work total USD value. So every time a block is mined, it's priced at the USD level, and then cumulative sum. So you can think about this as the total cost of production of BTC. And then what we've done, or Permal Nino did initially, multiplied that by 2, by 4, by 6, by 16, 32, 64. Now, for whatever voodoo magic reason, 64, 32 manages to pick the tops, right? Pick this top, pick this one, pick this one. And we got our first touch of the thermo cap, or the cost of production, back here in 2011. We then bottomed on the 2x, so that's basically saying that Bitcoin has developed a 2 times monetary premium at the absolute lowest bear market. We then had our rally up, crash back down, and we basically found support, if you include some wicks here, on the 4 times, and then almost came back and retested it here. So it's now got a 4x monetary premium at its absolute lowest point, and we're starting to come up and approach the 16x. So the last time we approached the 16x, we were certainly in the bull. But if we assume now that our floor has come up one level, the 16x is actually equivalent to the 8x back here, or this guy here. So you can see again that if you use that same framework, we're basically coming up to retest this level. We haven't hit all-time high yet at 1,200. We're here at $1,000, so we're about the same, 20% off or 25% off all-time high. And a little bit of volatility, get up above, and then away we go. So that price level is 17.3, 17.37 or 17,400. So we've got 2 resistance levels at 17,200 and 17,400, and we've got another one up at 18,000. So it's starting to say that there's a bit of fundamental resistance. I think all of us would from a technical analysis perspective, expect a bit of volatility, a nice pullback, and a reaccumulation for a little bit before the next leg up. Certainly, if it wants to consolidate underneath 17,000 and spend a bit of time there, that's a good sign that it doesn't want to pull back and it just wants to punch through. And we're into some serious bull action. So they're probably the levels just keep an eye on. And if you're looking for those, whether you're doing short positions or if you're just interested in whereabouts in the market cycle we are. So what we'll do now is just run on to understanding where the miners are at, because obviously the miners are the biggest natural sellers. And then we'll run through, and I'll just give you a quick fly over the masterclass structure and how it's all laid out. I still need to check in with Mav and just work out all of the sign-in details. So if you're listening to this, if it shows you a credit card thing to do the masterclass, don't pay it. Anyway, let's come back to that before I get sidetracked. We'll start with the miners and then we'll go masterclass. So I was playing around with this chart today. So this is showing it's technically the difficulty ribbon, but what it actually is the difficulty price. So we do the same linear regression that we would do for the stock to flow model, except we do it on the difficulty multiple. So we've spoken about this before. This is essentially the all-in costs of production for miners. So this is, in my opinion, this is the actual cost of production in terms of coin issuance. The difficulty multiple takes into account all of the hardware, all of the actual electricity, the logistics, all the other stuff that is necessary to manage a full suite mining operation. This is basically where miners would be under stress or not. And you can see that this here, you can see that we're starting to get this decompression. We had that drop in the difficulty because all the Chinese miners were moving their hydro rigs and things, but I do suspect that we'll start to see difficulty accelerate from here. And you can see that our difficulty price is 100 no, this isn't pricing. Hang on. Let me see if I've got this in pricing because that will be more useful for us. Difficulty ribbon 1. Let's go this guy. And just to note here, sorry. So this here is calculating the difficulty multiple linear regression. So this is actually the R squared number that Plan B bangs on about. Now, which one's here? This is, here we are. So this is the stock to flow. So this is my calculation for stock to flow to market cap. So the relationship between stock to flow to market cap, R squared 0.9. Now, that's very high. That means that there is a very, very strong correlation. There's only a 10% chance that stock to flow has nothing to do with price. So, there's a 90% chance that it does. The difficulty, the correlation of the difficulty to market cap is 95.5. So, to me, that's telling me that the difficulty price is, it may not give you a forward-looking moon math number that the stock to flow does, but in terms of predicting a fair value for BTC, I'm going to take this number every day of the week because this is based on actual mechanics of supply rather than, a scarcity metric that's, somewhat arbitrary in that regard. Now, this just gives you a bit of a feel for the difficulty price having some kind of significance and relevance. So let's jump back to the chart. Sorry. This is basically telling us, this is pricing, isn't it? Yeah. So this is telling us that the fair value for miners is around 12,800. So if price was to dip below there, I would expect to see more selling pressure. It means that miners are starting to get into some profit. It means that more miners are going to start coming on board, and that's going to make everybody else have to work harder. The difficulty goes up, miners have to work harder, and from that point in time, they're going to start increasing selling pressure. So again, we're getting to this point where miners are now into some, substantial profit if they're on aggregate mining at 12,880. And we're sitting up here at 16,000. They're going to start liquidating more and more of their positions. They're probably going to start selling more options. They're going to start, shorting futures, various other things on the market that's going to put some liquidity back into the sell side. So, that gives you a bit of an idea. What is that? 12,000 to 16. That's about 4,000 points. So we're talking about a 30% or 33% markup on their current cost of production. So that gives you a bit of a feel for, even the miners are now getting into a bit of profit. So to me, this is kind of supporting that we could get some sell pressure coming in at a later point. And just to kind of back up some moon math numbers here. So the top level here, these are again calculated based on our probability histogram. So at 95%, meaning only 5% of Bitcoin's history has ever been higher than that. This would predict that the current top of this market will be somewhere around 64,000, which kind of lines up with that stock to flow model, where we have about 75. And obviously, as price and difficulty increase, these numbers will also increase. So, we've got another metric here that's going to give us our topping signal. It's obviously going to accelerate. You can see that, where are we? We would be somewhere around here in that midpoint of this bull. And you can see that back there, it was saying that the top of the market would be 7,000. We basically got to 20,000, so it more than doubled where we were from there. So that would take us from 70,000 to 140,000. That's starting to actually line up with our stock to flow model. So somewhere in that 120, 140,000 range is a non-trivial, very possible outcome for this particular bull. So, you know, obviously these things will evolve with time and we'll get more clarity on it, but these are kind of some ways you can start using these tools. And there's an announcement on some of these charts that I'll talk about shortly. And I did have, the last one we'll look at is the Puell multiple. So we were just saying that the miners are more than likely going to get a little bit, they're going to want to start selling a little bit now. They've got, you know, a 40% premium on their current profit margin. I've lost my years for some reason here. Now, the Puell multiple is looking at, so this blue line is the 360-day moving average of miner income. So this is the miner income. So you can see it fluctuates obviously with the amount of miners that are on the network and hash rate and all that kind of stuff. When we get these rallies well and truly above their yearly income, this is basically saying that they're now operating at a significant profit. So you can see here that the red zones are profit to extreme profit. And when they're under stress, it's normally a good time. Miners start shutting down. The strong miners pick up hash. Good time to step in and start buying coins. So we get stress is good for us. So we are the opposite of miners. Miners are trying to sell onto us. We're trying to buy when they're stressed. We're the opposite trade to what a miner is doing. Now, you can see that we've basically had this, we've just broken above. So this recent rally has put miners again into profit. So they're now making more money than their cost of production, which is, what is it, 12 million. So this is $12 million daily was their 365-day moving average. So their yearly income, if you average it all, is $12 million a day across the whole network. They're currently making 17 million. So if you divide that by all of the rigs, that would give you your profit per rig. But the point of this story is that we're clearly in a zone where miners are profitable right now. They've got about a 30% markup. They've just had a difficulty wind down, so they're all in good shape right now. So I would expect more sell pressure to start coming onto the market. So these are all kind of things to line up with. We could get some volatility, a bit of sideways action. That is probably the more likely scenario in the whole mix. And then that's probably going to lead into the late stage bull. So before we move on to the masterclass, my overall thesis for where we are right now, we're in the transition between early bull and late bull. How long that takes remains to be seen. We're probably overextended. We could stretch up into the $17,000, $18,000 range, but I would not be surprised if we get a nice healthy shakeout to, you know, get rid of some longs and, you know, some of the new blood that are amongst us in the Bitcoin market. They need to see a few angry pullbacks to, you know, they're our sats at the end of the day. So we need to shake them out. So that's kind of my gut feel. We're in that transition period. We're going to start getting acceleration of realized cap, realized price, 200 days clearly accelerating. Keep an eye on those moving averages, golden ratios, and even just the 200-day multiplied by our factors. That will then give you those channels, right, where price is bouncing around inside those channels, and when it jumps up and finds the next level and accelerates up into the next set of bands, you know, that's when we start moving into the acceleration phase, and it's time to actually start planning where we're going to go and what your exit might look like. So, you know, if you can believe it, we're starting to get to the point where that's becoming a consideration. Now, let's jump on to the masterclass. Just before we do, Crypto Maniac has been working behind the scenes. You know, within a day of me having a chat to him, he spun up a very first template of getting all of these charts live. So in the near term, we're going to be working towards getting all of this stuff live so that you guys can actually log in and start using all of these charts. It's literally going to be my version of woobull.com. We're going to start nice and primitive just to get these charts ready for you. It will also allow me to then accelerate into the masterclass. I can stop spending time worrying about getting these charts to you, and rather we can start actually delivering more modules and content like this. So that's really exciting. That's I think that made my day when I heard that things were progressing on that front. So thank you very much to Crypto Maniac, and I really look forward to getting those spun up and live for you all. So this is the masterclass section. So this is at readyset.vision. As I mentioned before, I need to check in with Mav and just understand the sign-up process. If you're an Omnia member, you do not have to pay for the course. It's part of your Omnia subscription. if you have any issues logging in, just let us know, and we'll put together a little bit of a guide on how you actually get into this thing to make sure no one ends up in the wrong place. But readyset.vision, the masterclass itself is this one here. What I'll do is I'm actually going to flesh out one of these modules attached to this. So this will be the masterclass itself. And what I'll do is I'll set up another course to document lessons like this one. So it'll kind of be like a running, you may come back and find some of these particular rants that I go on and find something useful in there, or you just want to check, or you've heard that particular story before. You can go back and you'll get an insight before you do the actual masterclass, the more formal understanding of it. You get to hear me ramble on about the various metrics and, just kind of talk my book and use those as a reference. So I'll set up another one of these sections to look at. But inside the masterclass itself, so at the moment we've rolled out lesson 1. So each of these is a module and it kind of covers a particular topic. And then within it, we've got individual lessons themselves. So at the moment, the what is, or the introduction class, is fully released. The Magic Lines class is fully released with the exception of the Decred Mayor Multiple. I've got the everything set up. I just need to do the recording and get that issued. So I'll do that this weekend, the coming weekend. So when you go into these individual classes, once it boots up, you'll see that it's got the some fancy introductions, but a bit of a general overview. I try to keep these text sections fairly high level. Most of the content's in the video, but if you do happen to want to go back and you're not sure what video it's in, I tried to put the fine details. If you check this, it would trigger your memory. You say, yes, this is the class that I'm looking for. It's got that particular topic or thing. So the text is useful. It's supposed to be concise, and the idea is it'll give you a bit of a memory jog if you happen to need to go back and look for a particular lesson section. And then each one will have then there's some of them are 20, some of them are 40 minutes. A video section, which is me talking through whatever the module happens to be. So you'll be able to go through each of these lessons, understand what's going on. This first one talks about what on-chain analysis is, why it's important, the psychology of it all, a bit of a higher level view on things. And then the first module is Bitcoin's Magic Lines, which then culminates in Decred's Magic Lines. And the reason we start with the Magic Lines is, first of all, because they're powerful. And even though they're not on-chain, the tools that we will use in here, we set up the framework that we will use that continue, like for the realized price, we will also have the same kind of framework and how we build the oscillator, how we establish the probabilities, all that kind of thing. But we will go through it in these ones much quicker. We won't spend time worrying about all of the probabilities. I'll show you how I develop it, but I won't spend a great deal of time running through it. This guy here, this probability of mean reversion, many of you have seen these histogram charts, and then these histogram charts with a cumulative distribution plot. This is the class where if you want to understand where these percentages come from and what they mean, this is kind of the front and center. This is where I go through it step by step. I think it's like a 40-minute long video where I explain each of the axes, how it works, how we get to the probabilities. I know many of you may not have seen probability analysis before, and all this just looks like, it's a whole lot of noise. What I tried to do is break it down so it's fairly digestible. If you do have questions, let me know. But hopefully this is a good reference for you to understand where our probabilities come from. The alternative is that you can just take my word for it and assume that I've done the work. And whenever you see these colored bands, at least you know that we're talking about 5% probability, 10% probability, and I'll always have the probabilities on the actual legend here. So you'll be able to refer to and know exactly what the percentage means. It means the probability that price remains or stays inside that zone, and therefore if you do 100% minus 70%, that means there's a 30% chance it wants to go the other direction, or vice versa. So that's kind of that's the update for now. If you've got any comments or questions, or you have any troubles getting into the masterclass or playing around with it, just give us a shout. We'll put together a bit of an intro sheet so that you all know exactly how to get into it. And I think you have to create an account for Ready Set Vision, but you don't need to pay for it. So just bear that in mind. Any feedback is absolutely appreciated. Anything you think that wasn't clear, or we can flesh out more, you want to see more of or less of, let me know. And yeah, really looking forward to getting these charts set up for you all, so you can start playing around with it. Until then, happy trading, and I'll see you in the chat room. Cheers.